Now the price of WTI crude oil has been coming off. It's been moving south, and could that mean cheaper prices for us at the pumps? Well, I hope so, but we will see. But is there more downside to come? Well, I'm going to take a look at some sentiment, fundamentals, the technical analysis to try and find out. So with that, let's get on with it. So starting with the Baker Hughes rig count, looking a bit more positive from last analysis we did on WTI. The US line, that's the one I look at, +1 change from prior count and +243 change from last year. So signs of bullishness creeping back in after a sort of flat, more negative period over the last month or so. And inventories, when they're a hard one to use for general direction, use them more for anomalies in the actuals and forecasts. And as we can see at the moment, last week better than expected, 1.142 million barrels, and forecast for this week 0.33 million barrels. So watch out for Wednesday afternoon's numbers. So into some sentiment indicators down the bottom, seasonality, and we can see at the moment, if we just focus in there, that it's looking a bit flat. Nothing too spectacular, bit more bullish on the left hand side there as we go through October, and then we pull back and then up into that nice long summer bullish run. But the interesting takeaway from this chart is the COT data. Now the red line here, that's been trending up nicely, that's the large commercials, but it's the black line above it, the large speculators. Now they are the traders that should be following the price because it's their job to get it right in calling the price. But interestingly, we see here there on the right, it's been moving upwards against the trend. So that could be suggesting that maybe they're building up bigger, longer positions for a move on back upwards. And we can see on the price chart there, that support, those red dashed lines there, the support resistance sort of zones where the price is trading at the moment. So that's something to watch very closely over the coming weeks, whether we see the large speculators building up more of a long position, or I say pulling off back down, back in line with the current down trend. And into the weekly line chart, what can we take away from that? Well, we've still got this interesting support zone here, the yellow shaded area, and that trend line. So there's got a bit more downside to move to, maybe down into the mid 70s. So interesting key support zone at this sort of area of price. And we can see that that 2 standard deviation regression band break up there still holding, and it's been moving on down, like I said, into that yellow zone. And really the trend line break would be quite significant, and the price could then start thinking about the mid to late $50. But if it holds here, I say we'll be looking for a bounce back up towards $100. Now if we are bullish on the price, the 4-line break chart, set this to a daily setup, so a bit slower in terms of signals, so maybe a bit more of a longer term point of view for entry points. But $82, $86.50 if you're looking for an entry point back into the market. And then onto the daily Heikin-Ashi chart, and at the moment signals all pretty bearish. Volatility, I suppose, picking up into the mid 40s, but nothing unusual from the last few months that we've seen. Volume not really doing much at all, maybe coming off a bit. Onto the price, we had that breakout from that triangle wedge pattern that we could see building up over time, and then we're in this sort of channel of price activity, which could mean we've got a bit more downside, which would take us into the mid 60s. But then if it wants to get up, it's got to break through that sort of zone in the early 80s before thinking of pushing upwards. And then some really short term price action, the Renko chart, $1 block size, signals still all weak and bearish at the moment. As you can see there, trend has been going downwards, and where could we be targeting to the downside? We got $75, then early 60s, and then mid 50s, and to the upside 95, 105, 107 sort of area, and then into the early 120s. So score time based on the technical analysis, I'm going to go bearish overall just because of the current setup of the technical analysis. Heikin Ashi a bit stronger than the Renko, and if we head on to that right hand top corner, the interesting one is the COT data, which looks like we say when we looked at those large speculators, it could be turning a bit more bullish, so something to definitely watch out there. Now in terms of targets, 3.29, 4.29 to the upside, and downside 2.33 and 3.5 to 1 to the downside. So some good plays in either direction, but based on the technicals, I'm staying with a bearish POV at the moment. Now WTI Crude Oil is a really interesting one at the moment. It could easily get down to say $65, $55, and that's what the technical analysis is suggesting, but I've got a feeling that the market would rather have it at between $80 and $100 at the moment. So it's a tricky one to play out, so I would just trade it with the signals that you actually see rather than trying to second guess what's going on. But let me know in those comments below where you think it may be heading next as well. Love to hear from you, and if you've liked today's video, please give us the thumbs up. Don't forget to hit the subscribe and bell buttons, and all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.